Imagine your money growing while you sleep quietly, predictably, without drama. No chasing hot tips. No 10 apps yelling at you. One simple plan, one clear rule, and time doing the heavy lifting. If calm wealth sounds better than financial noise, stay with me. In the next few minutes, you'll learn a beginner-proof way to invest with one index fund on Autopilot. It's intentionally boring, and that's why it works. Low effort, low drama, highly repeatable. We will keep decisions few steps short and results clear. Here's the roadmap. First, what an index fund actually is. Second, the one fund plan that removes complexity. Third, the autopilot setup that runs even when you're busy. Fourth, what to do when markets move. Fifth, a 5-minute monthly check. Then we'll handle irregular income, partner splits, and tiny raises that make the habit stronger every quarter. Most people invest like they're chasing a bus late, breathless, and ready to quit. Wealth is not a chase, it's a well-kept garden. You plant once, water on schedule, and don't dig it up every weekend. Today we'll plant a simple rule that survives moods and headlines, so time can do the compounding. Step 1. Understand the tool. An index fund buys a slice of many companies at once. You're not predicting winners, you're owning the whole field. Costs are usually low, rules are simple, and diversification is instant. The market will swing. Your basket stays broad. The point is not to be clever. The point is to be consistent. This week, open your broker's page for a broad total U.S. market or S&P 500 index fund. Find the expense ratio and write it down. Lower is better. If fees look high, search for a cheaper share class or a different provider. One page, one number, one goal. Keep costs low so compounding has more room to work. Step 2. The one fund plan. Pick one broad U.S. index fund you can hold for years, not 3 funds, not 5. 1. That kills decision fatigue and timing games. You avoid the what now spiral and keep your hands off the controls. Later, if you want international exposure, you can add it after the habit is strong. Write the fund's name and ticker in a single line. Put that line where you see it. A note on your desk, a line in your tracker, or the top of your phone notes. Clarity beats complexity. You are building a money routine, not a collection of products. One fund is enough for most beginners and more than enough to get momentum. Step 3. Open or confirm your account. You need a brokerage account where you can buy that fund. If your employer plan allows automatic contributions, use it. If not, open a reputable brokerage yourself. Keep the login simple and secure, and turn on 2-factor authentication. Favorite the fund so it's one click away. Fewer steps means fewer excuses. If your broker offers dividend reinvestment, sometimes called DRIP, switch it on. That way, every dollar that arrives keeps working without you thinking about it. If there are optional settings you don't understand, leave them at default. Your edge isn't configuration, your edge is consistency. Step 4. Automate the contribution. Set a monthly transfer for the day after you get paid. Pick a fixed dollar amount. Consistency beats intensity. If money is tight, start small, $25 or $50, step it up later. The habit matters more than the number on day 1. A small stream that never stops carves the canyon. Schedule the transfer and enable a confirmation email so you know it happened. Keep a small buffer in checking so the transfer never bounces. If your pay is weekly or bi-weekly, you can stack smaller transfers that equal your monthly target. If cash flow is messy, set the date 2 or 3 days after payday. The point is rhythm, not perfection. Step 5. Make the buy rule. Every month, buy the index fund, no matter the headlines. If markets drop, your dollars buy more shares. If markets rise, your dollars buy fewer. That's dollar cost averaging. The habit survives moods and news cycles. You don't have to be brave. You just have to be scheduled. If your broker supports automatic investing in that fund, turn it on. If not, create a recurring reminder titled by the fund on the same day each month. Treat that reminder like brushing your teeth. You don't debate it, you just do it. Step 6. Grow the habit. Good systems get heavier over time. Every 2 or 3 months, increase your monthly amount by $25 to $50. Tiny steps today become real money in a year. Add a calendar note that says, increase Autopilot by 60 days from now. If your brokerage allows scheduled increases, make the raise automatic. Here's a simple pattern. Months 1 to 3, $50. Months 4 to 6, $75. Months 7 to 9, $100. Months 10 to 12, $125. No drama, no heroics, just a steady climb that your budget barely feels, but your account will notice. What do you do when the market moves? If it drops, you're buying cheaper. That's a feature, not a bug. If it soars, earlier buys are working. You simply keep your schedule. Your job is not to predict. Your job is to keep the conveyor belt running. Rules beat moods. Schedules beat headlines. You win by being the most boring person in the room. Let's talk irregular income. If your pay varies, use a percentage rule. Move a fixed percent of each paycheck's, a 5, 10, or 15% into your investing transfer. On high months, the percent makes you generous without thinking. On low months, the percent protects your cash flow. The rule flexes, the habit holds. Add a small smoothing buffer. Keep 1 extra month of contributions in a separate savings line, so a weak month doesn't break your streak. Refill that buffer on strong months. Think of it like a spare battery for the routine. Your goal is to protect the habit through the real life that happens between paydays. Now, partner splits. If you share bills, you can still keep a simple plan. Agree on the joint amount that funds the essentials, then let each person run their own percentage rule for investing. Yours, mine, and ours. Fewer arguments, more progress. The One Fund plan works at household scale because it removes "what do we buy" from the discussion. Here's the 5-minute monthly check. First, did the money transfer? Second, did the fund purchase execute? Third, do you adjust the amount by $25 up or down based on comfort and cash flow? Then close the app. No dashboard rabbit holes. 5 minutes and you're done. If you want to be extra solid, add a quarterly review on your calendar with one question. Can I raise this by 25 without stress? Common objections: I'm starting small. Does it even matter? Yes. Money compounds, and so does the habit. A small number repeated beats a big number you quit. What if I picked the wrong fund? Choose broad, low cost, diversified. If it's those 3, you didn't. I'm late to investing. The best time was yesterday. The next best is your next paycheck. Start now, increase later. What if I panic when the market drops? Write your rule on paper and put it where you see it. Then make the environment do the work. Automatic transfers. Automatic buys. Fewer clicks between you and the action. Courage fades. Systems don't. What if I miss a month? Don't double to catch up. Just resume at the normal amount and raise by 25 at the next scheduled increase. Mini case 1. Jordan started at $50 per month. Month 3 felt easy, so the autopilot went to 100. Month 9 reached 150. No predictions. No news-based changes. Just the rule. 12 months in, The account grew not because of luck, but because the conveyor belt never paused. The system got heavier. The stress got lighter. Mini case 2. Sam's income swung a lot. They used a 10% rule with a 1-month buffer. On weak months, the buffer carried the routine. On strong months, the percent moved more money without willpower. Over a year, Sam never missed a buy. The habit survived volatility because the rule flexed with reality. Let's make this painfully simple. 1 index fund, 1 monthly transfer, 1 rule. By every month, add a tiny raise each quarter. Ignore the noise. If you want to feel progress, track only 2 numbers. Total dollars contributed this year, and number of months you kept the streak. Celebrate consistency, not headlines. If you need to tighten your budget to find the first $50, cut fees before you cut joy. Swap one expensive subscription for a cheaper alternative. Move cash to a higher yield account. Call your provider and ask for a better rate. You only have to do these once, but the Autopilot benefits every month. If you want to get fancy later, you can. Add international exposure. Add bonds as your timeline shortens, but not today. Today, you make the simplest version unbreakable. Systems beat strategies you don't follow. When in doubt, reduce steps. When stressed, return to the rule. Here's your 1-page routine. Choose the fund, set the transfer, make the buy rule, raise by 25 every 60 days, 5-minute monthly check, quarterly nudge, if comfortable. That's the engine. Boring on purpose, powerful by repetition. Let's recap. 1 index fund, 1 monthly transfer, 1 rule by every month. Time compounds. You protect the habit. Add a small raise each quarter. Use a percentage if your income is irregular. Keep a 1-month buffer for smoothing. Write the rule where you can see it, then let the schedule do the deciding. If this helped, watch the Autopilot Money playlist next and grab the 1-page tracker below. It keeps your routine honest without noise. Keep it calm, keep it simple, keep it running. Thank you for watching. This is education, not financial advice. I'll see you next week for the 5-minute money audit.